Hey everyone, welcome back to Corporate Decoder, the place where we decode those confusing corporate filings to bring you the real story. Today we've got a filing from Nightfood Holdings, Incorporated, that is going to change how we think about something you might have in your pantry right now. So what is the big news? It looks like Nightfood Holdings is making some pretty significant changes to how their Series B preferred stock can be converted into regular stock. This isn't just some boring paperwork shuffle. Folks, this could seriously impact how much influence shareholders have and what their stock is actually worth down the line. You are looking at a Form 8K filing, a current report that companies file when something important happens. Think of it as a public announcement for major corporate events. This one comes from Nightfood Holdings, Incorporated, and the date here is the 30th of October 2025, which is the earliest event reported. Nightfood, as it is known, is registered in Nevada, and their file number with the CC is 000-55406. It is a pretty standard setup for how companies report their information. This number right here, 46 to 3,885,019, is their IRS employer identification number. It is like their social security number for tax purposes. They're located in Los Angeles, California. Just your basic address information you find at the top of these reports. And their main phone number is there if you wanted to call them directly, but honestly, that is not usually why we're dissecting these reports. Now pay attention to this part. Companies sometimes use an 8K to file information that also relates to other regulations. These checkboxes are for things like written communications used to solicit investors or communications before a big takeover bid. For this report, it looks like they are not using the 8K for any of those specific purposes, as all these boxes are unchecked. The company is also indicating whether it is an emerging growth company. That is a designation for smaller companies that get some regulatory breaks. Here, they've checked the box indicating they are not an emerging growth company. This means they have to follow all the standard rules without any special leniency. And here, they detail the securities registered with the exchange. In this very specific case, it says, not applicable. This tells us that for the securities listed on an exchange, there are no specific classes being registered under this report detail. Okay, let's get to the heart of the matter. Item 5.03 highlights changes to their foundational documents like their articles of incorporation or bylaws. This filing is specifically about an amendment to what is called the Certificate of Designation of Preferences, Rights and Limitations of Series B preferred stock. That is a mouthful, I know, basically. It is a legal document that defines the special rules for a specific type of stock. In this case, Series B preferred stock. What changed on the 30th of October 2025 is how this Series B preferred stock can be converted into the company's regular common stock. Before this change, holders of Series B preferred stock could, at their own choosing, convert their preferred stock into common stock and warrants to buy more common stock. They had until the 31st of March 2026 to do this, but now, with this amendment, the game has changed. Instead of individual shareholders deciding when to convert, the conversion of all outstanding Series B preferred stock can now be triggered by a vote or written agreement from holders who own at least 50.1% of that Series B preferred stock. This means a simple majority of the Series B preferred shareholders can now force a conversion for everyone holding that type of stock. And here is a crucial number. Each share of Series B preferred stock will now be converted into a whopping 8,366 shares of the company's common stock. This is a very significant conversion ratio, and it's important to understand the implications. The company's board of directors gave this amendment a unanimous thumbs up. That's usually a good sign that they believe it's in the company's best interest. More importantly, the holders of the Series B preferred stock themselves also approved it with a majority vote, giving it the necessary power. Now, let's look at where they filed the supporting documents. Item 9.01 is all about exhibits. These are the actual documents referenced in the filing. Here we see Exhibit 3.1, which is the amended Certificate of Designation of Preferences, Rights and Limitations of Series B preferred stock itself. This is the legal document that lays out all the details of the change we just discussed. And Exhibit 104 indicates an interactive data file, which is standard for regulatory filings nowadays to help with automated analysis. Finally, we have the signatures. This is where the authorized representative of the company signs off, confirming the accuracy of the filing. The report is signed on the 31st of October, 2025. And here we see the signature of Jimmy Chan, who is the Chief Executive Officer of Nightfood Holdings, Inc. He is officially certifying that everything in this report is true and accurate to the best of his knowledge. Now, let's put on our financial detective hats and see what this actually means for Nightfood Holdings and its investors. The core of this filing is the change in how Series B preferred stock converts. Previously, it was an option for the holder, giving them flexibility. This change shifts control. Now, A majority of Series B preferred holders can force a conversion. This is a big deal because it can dilute the ownership of common stockholders. When a large number of preferred shares convert into a much larger number of common shares, the value of each individual common share can decrease because the total pie is being sliced into more pieces. This also signals a potential shift in strategy or perhaps a need to clean up the capital structure. It could mean that the company is aiming to simplify its share structure, or perhaps it is a preemptive move to deal with potential future conversion deadlines or events. The conversion ratio of 8,366 common shares for every one Series B preferred share is extremely high. This suggests that the Series B preferred stock might have had very favourable terms originally, or that the common stock value at the time of original issuance was very low. By forcing a conversion, the holders are effectively locking in a large number of common shares, which could be a sign that they expect the common stock to increase in value significantly. From a Warren Buffett perspective, we look for companies with understandable businesses, strong management, and a good return on equity, all trading at a fair price. Here, the business itself is understandable Nightfood holdings. They aim to provide healthier snack options. However, the complexity of preferred stock structures like this Series B sometimes hides underlying issues or strategic shifts that aren't immediately apparent from just looking at revenue. The fact that a majority of Series B holders can now force conversion suggests they might believe the common stock is undervalued or about to become much more valuable. This could be an opportunity for those who bought Series B shares at a lower price. But it is a risk for current common stockholders who might see their ownership diluted. The key risk here is dilution. If the company doesn't see a significant increase in its business performance or market value soon, the conversion of these preferred shares could lead to a substantial decrease in the earnings per share for common stockholders. Wednesday need to see more financial data to assess if this move is a proactive step towards growth or a reaction to underlying pressure. Without seeing the actual financial statements within this filing, it is hard to say if the company's fundamentals are strong enough to absorb this potential dilution gracefully. However, management's unanimous approval and the majority shareholder approval indicate they believe this is the right move for the company's future. In conclusion, this 8K filing from Nightfood Holdings Incorporated is significant. It signals a major shift in the conversion rights of their Series B preferred stock. Moving from an option for holders to a potential trigger initiated by a majority vote, this change could lead to substantial dilution for common stockholders, but also represents a strategic move by the company and its key shareholders, likely driven by expectations of future common stock value appreciation. What are your thoughts on this stock conversion change? Do you think it's good for Nightfood Holdings in the long run, or is it a red flag for common shareholders? Let us know in the comments below. If you found this deep dive helpful, please hit that like button and subscribe to Corporate Decoder for more clear insights into the world of finance. Don't forget to check out our Discord community, linked in the description for even more discussions. Thanks for watching, and we'll see you in the next Decode.